Welcome back. I'm Pratap here. Today is 4th November 2024. In this video, I'm combining both Q&A-15 session with HLQ zone performance evaluation. First, let us focus on the Q&A session, and then we will focus on the HLQ zones identified in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to our free training course. Here you have a YouTube playlist link that will take you to all the training videos. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other very important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. First, let's start with the Q&A. So this is the question asked by one of our members. In the Nifty demand supply demand zone chain and daily time frame. So this is the Nifty chart. This is on the daily time frame. The software is showing a demand zone with base candle and 26th zone 24. See, this is the candle, base candle and 26th zone 24. Our software identified this is a medium size leg in, this is a medium size base candle, and then this is the rally candle. Prices are moving out of the zone. And his question is, but this candle, that is the candle, the base candle on June 26th, doesn't appear to be a base candle to the naked eye. It is a medium range candle with more than 50% body. Please explain. That's true. This candle is having a more than 50% body. So how can our software identify this as a base candle? And surprisingly, from this zone only prices are started moving up. It entered into the zone and started moved up. And today again it entered into the zone. See, sharply after that there is a rejection and considerable amount of points moved away from the zone today. How it is possible? Identified a zone that is against the rules you learned in our course. But that zone is working very well. How it is possible? That's why he is surprised. That is the reason why he asked. Yes. What kind of candle it is? It is not a base candle. But is it a leg candle? This medium size candle is not having 75% body. So it is not a medium size leg candle. It is also not having a less than 50% body. That's why it is also not a base candle. Neither it is a base candle nor it is a leg candle. Then how to consider this candle? Every candle should be qualified either a base candle or a leg candle. There is no other choice. Every candle has to be qualified as one of these candles, either base or leg. Within the leg, maybe leg in or leg out, they are all different stories, the concepts as per you learned. But at least every candle should be recognized as either base or leg candle. You should not leave the candle like that. So that's why the candles which are not qualified as a base candle or which are not qualified as a leg candle, that can be considered on either side. Previously also once I answered this question when one of our members asked, but I am not sure that answer I recorded in the Q&A or not. That is the reason why today I decided let's keep this in the part of the Q&A so that people In the coming forward, any of you are getting this such kind of doubts, new members, at least from Q&A you will get the answer. Previously answered, the candle which is not qualified neither as a base candle nor a which is qualified neither as a base candle nor a leg candle can be used on either side. It can be used as a leg candle, it can be used as a base candle. Either one it can use. But while using, very intelligent way you have to use. Otherwise sometimes you may get wrong results. That's why NeoStock software, I developed a very complicated algorithm to recognize that as a base. Not just randomly picking up. It's not that case. Lot of checks will be performed based on the historic data in the earlier candles, and it will do a lot of mathematical calculations that is beyond our human calculations level. Machine level it will be doing. Then intelligently it is having a lot of intelligence, software is having. So it recognizes that candle. It will make sure that that area probably it is having some order flow. It need not be. It may not work 100%, but in an intelligent way it selects. Once you fine tune that zone, you will be in a position to identify whether we need to consider the order flow or not. That is as per the concepts you learned in lesson 20 checklist. But before that, you should understand there is a candle that is not either medium size candle. Remaining rules are very clear. Medium size candle, there are some candles not qualified as either a leg candle or base candle. So those candles can be used either side. Depending on the situation, either side you can consider them. But while considering in an intelligent way, you consider. Definitely you need some experience before considering. At least good knowledge is required. Otherwise, such kind of zones, if you have any doubts, ignore them. But otherwise, once your experience grows, at least you get some better understanding. Anyway, our NeoStock software is in an intelligent way, it is able to recognize those candles. Whether to consider that candle as a base candle or it should be considered as a leg candle, such kind of intelligence it will apply. And finally, it will identify the candle, either a base candle or a leg candle. Based on its internal rules, it will confirm the candle. So exactly that is the way, this is the area is confirmed as a base candle. That's why it is considered as a rally, base, rally. How perfectly it is considered? See here, prices entered into the zone, just touched the zone and started moving. How many points? This is somewhere here, 23,892. So let me say 23,900 approximately. After that, after it touched the zone, and how many points it has given? 26,250. Imagine how many points. Here it is 23,900. So 100 points, if you deduct, if you add, it is 24,000. This is a 26,250. So 2,000 points plus 100 here we deducted, and here another 250. That means 2,350 points move it has given from here to here. 2,350 points move. Can you imagine the power of this zone? And moreover, there are fine-tuned zones. These are all not really fine-tuned zones. Why these are all not really fine-tuned zones? Let me show you. Let us go to the 75 minutes time frame. We have a 75 minute zone is available here. So this is the leg-in. You have 3 base candles and then you have a rally candle. Within this 75 minutes, there is no proper 15-minute structure. 15-minute structure is not good. Here there is no proper 15-minute structure here. Maybe some extent you may consider this is a drop, this is the base, and this is the rally. Again, some intelligence is required here whether to consider, because this is candle again neither it is a base candle nor a leg candle, medium size candle. It is a medium size candle. If you consider, definitely this is a fine-tuned 5-minute zone. Even if it is not fine-tuned 5-minute zone, still you consider this zone based on the aggressive trade setup. Let me go to the 5 minutes time frame. Even if you feel that 15 minutes is not a convincing zone, no issues. Because we got an excellent price action clues here. First of all, here we have a rally, 2 base candles and a rally candle. See here, prices came near to the zone and again moved up. Prices went up, came near to the zone. That means this can be used as an aggressive trade setup. Again here, drop, base, rally. Earlier the 15-minute zone, if you are not convinced. See here also, prices came very near to the zone, very, very near, and then sharply moved up. So this clue indicates here we have an aggressive trade setup. We can plan, indicating that this is the area probably we are having strong order flow. See next time what happened? Prices touched this zone for this aggressive trade setup area, 5-minute zone, when this is on 5th August. After that there is a move, good move. 5th August it gave intraday, it gave very good. Those people who are holding also would have got a good profit. See after that slowly the prices were moving and finally it gave you nearly the 2000 points move it has given till this all-time high. From this move, in case if anybody hold it, within how many days it has given? When it is, this is on 5th August and this is on 27th September. So almost a 2 months period. It has given 2000 points move, 2350 points. So this is the zone. Actually, this is the area it is tested first. Okay, this 5 minutes aggressive trade setup is tested. There are higher chances next time this setup will be violated because it is a tested zone, this 5-minute zone. See today that is what happened. Today this 5-minute zone is violated today. But here the other fine-tuned 5-minute zone, if you drawn the earlier 15-minute zone, if you convince earlier 15-minute zone, this could have been a fine-tuned 5-minute zone. If you did not convince that 15-minute zone earlier, whatever I told you, but actually I didn't draw that. But still this zone is qualified as an aggressive trade setup. Why? Because earlier prices came very close to this zone. This is what we discussed. Prices moved up and fall down and came very close to this zone and started moving. That way also we can say this is an aggressive trade setup. And today market sharply down today. But exactly after reaching this 5-minute zone, it was started moving up. And again from here to here, the high of today, it has given nearly 180 points move it has given from here to high of this high of the day. After touching the high of the day, I am talking. Earlier, this is the high of the day. I'm telling after it reached this 5-minute zone, it gave you maximum 180. Maybe you might have exited somewhere before itself. But I'm trying to tell you from this zone, it gave today up to 180 points move. What kind of zone? The zone which you don't recognize with your naked eyes. That is what he clearly said. But this candle doesn't appear to be a base candle to the naked eye. The zone which doesn't appear to be appeared for your naked eye, that worked very well and which is identified by the software. That's why software identifies some zones which our naked eye can't identify. That is the power of the software. Just doesn't draw the zones. I have seen some soft people are in trading views, they developed the scripts. Wherever base candles are there, nicely it draws the zones in trading view. But those softwares doesn't identify such kind of zones. Then what is the use? Drawing the zone is not important. The zone that is having good order flow, identifying is very important. The zone which are having good order flows are not identified by some of the trading view who are drawing these zones with some scripts, trading view scripts who are drawing the zones. They are just marking the zones. Marking the zone is not important. Identifying the zones, having strong order flows is important. Maybe today our software did not identify this as a high liquidity zone. According to the software, as on today, it is a normal demand zone only. Maybe our software is also having some limitations in identifying some of the high liquidity zones. But in the coming forward, our software also may identify this as a high liquidity zone, but not today it is identified as a high liquidity zone by our software. Probably after several multiple tests, it may identify. That possibility is there. Of course, our software identifies fresh zones, also high liquidity zones, based on certain algorithm rules. Those algorithm rules might not have been applicable here. That's why it is not recognized as on today. But it is having a strong order flow, and this zone is not qualified as a zone for our naked eye, but still software identified, and which is working very well. So far it is tested 2 times, and both times it gave very good results. During the intraday it gave very good results. See here in this candle, after it touched, see how sharply it moved. See the rejection here, and continuation that it gave a very good move for long term also. But today again you see a very big rejection today, and continuation is that is it going to move further or not, it is all again depending on our demand and supply zones in the coming days. But today intraday point of view, already it is proven. This is what you have to understand. Earlier just at the first 5-minute zone it moved up, and here the second 5-minute zone. But both these zones are qualified as aggressive trade setups because both are having very good price action close. And today's zone is having even more powerful price action clue, because prices came very close to this zone, and then prices were started moving up. So this is what you should understand about why our software identified this zone. Always remember, there are some candles, medium sized candles, they can't be identified either as a base candle or as a leg candle, because medium sized candle, leg candle qualification minimum 75% body, base candle qualification less than 50% body. But this particular candle is having in between base candle requirement and leg candle requirement. Such kind of candle will be qualified either as a base candle or as a leg candle. But actually what exactly it qualifies? Is it a base candle? Is it a leg candle? You should apply some intelligence and you have to take a decision. Definitely you need some experience for that. And the software is having some other intelligence, some complicated software algorithm I developed for identifying such kind of candles. Lot of checks it will be doing, not based on the demand and supply zone rules, some other price movements in the market, the other price action related concepts, many other things I mixed and I developed an algorithm. Based on that, the software at the best possible way, it will identify whether the candle is a base candle or as a leg candle. If it is a base candle, it will identify a zone. If it is a leg candle, probably that will be used as a either leg in. If it is a big leg candle, maybe leg out. Anyway, big leg out candle, this algorithm is not required because they are the ERC candle. ERC candle rules are different. But medium size leg candle, mostly we will use as a leg in. So such kind of candle which is not identified by our human eyes, our naked eyes, which is not recognized but still software identified and which is working very well. Even though it is not a high liquidity zone as on today, still this zone is working very well. It gave two good profitable trades. A zone which is not identified by our human eye, which is identified the rules you land, the general rules you land, which is not identified, which is against the general rules you land. That way software identified a zone. Of course, such kind of zones you won't get regularly, rarely you get. Very rare. So remember, it is a very, very rare situation. Hope you got the clarity. Always remember, time being, remember all of you, please remember, the medium size leg candle is not qualified as a base or leg candle. You can be used as a either leg candle or base candle. Depending on the situation, you take a decision. Based on your human judgment, you have to take a decision. There is no other choice. Software uses some complicated algorithms. That is a different story. But the thing is, a human point of view, you take a decision. Either depending on the situation, you can select that candle as a lagging candle, or depending on the situation, you can consider that candle as a base candle. Whichever you feel best suitable in our analysis, that way you take a decision. Hope I made it clear. If you are not convinced, ignore this zone. Maybe you miss the opportunities, right? Nothing will harm you. Just missing the opportunities, that's it. Anyway, you are not getting any loss. If you take a wrong decision and if you take, you planned a trade and zone is violated at the time, definitely it will hit stop loss. So that's why you take your best decision based on your judgment. Those who are using softwares, you need not worry. Software is always providing you the zones in a better way. It is doing its own calculations. Okay, hope this is the Q&A-15. Next, let us continue with our HLQ zone analysis. The first one is ZK Cement. ZK Cement is having both 75 minutes supply zone and 75 minutes demand zone. It is moving between both the zones. See here, this is the drop, base, drop. Already we fine-tuned. I already explained how I fine-tuned this zone. I think probably on this 29th October, probably in 30th October video, I might have explained you how I fine-tuned. So I am not getting into this. And also it is having a rally, 1, 2, 3, 4 base candles and a rally. Software consider all these are all base candles. It looks like ERC candle, right? But maybe software point of view, this is a calculations point of view, it is a medium size candle. So that's why it came part of the base. So that's why we need to, you get trade opportunities either in this zone or in this zone. Several times I told you, when you have both prices are moving, high liquidity demand and supply zones, either side we get trade opportunities. And today we got opportunity in this demand zone. And moreover, lesson 22 concept. And of course, fine-tuned zone. Both also it is applicable. This zone is having fine-tuned zone and also that fine-tuned zone is also acting as a lesson 22, lower time frame zone as an horizon to the higher time frame zone. Go to the 15 minutes time frame. See here you have a rally, 2 base candles and a rally. Rally, 2 base candles and a rally. This is the 15-minute zone overlapped with this 75-minute zone. Where the overlap took place? At the distal line the overlap took place. Not exactly in the middle of the zone or not exactly inside the zone. A part is inside the zone, another part is outside the zone. And previously we learned a lower time frame zone as an horizon to the higher time frame zone is a powerful concept. But this is a 15-minute zone. Definitely we should have a fine-tuned 5-minute zone here. So again went to the 5 minutes time frame. The 15-minute zone is having a fine-tuned 5-minute zone. This fine-tuned 5-minute zone is also overlapped with this 75 minutes high liquidity zone. See here, this is having a failed ERC candle, looking like a drop candle. So this is the leg-in candle. You have two base candles, and then you have a rally candle and follow through candles, and after that prices entered into this fine-tuned zone, picked up the orders, and again moved. Now once again it entered into the zone, picked up the orders and moved up, and once again it entered into this zone and picked up the orders, and this time this entire 75 minutes high liquidity zone is formed. That means this 5-minute zone as an horizon, the fine-tuned 5-minute zone as an horizon. Remember, this 5-minute zone is a fine-tuned zone, and also it is an horizon. See how powerful it is going to be. Because it is having multiple tests it is supporting, probably it may act as a high liquidity zone also. The 5 minutes high liquidity zone. Such kind of zones are very powerful. See today what happened? Exactly in this, the 5-minute zone as an horizon to this entire high liquidity zone, and also it is also acting as a fine-tuned zone, and also it is acting as a high liquidity zone. So many characteristics this 5-minute zone is having. Today it entered into the zone. Here this is the 15 minutes target zone. Go to the 15 minutes time frame. Here you have a ERC candle acting as a rally, 3 base candles and a drop with a hidden body. All these characteristics are there. Finally, see how sharply prices were actually falling down. Observe here how sharply it is going down. See the candles. They are a drop candle, drop candle, drop candle, drop candle. And finally, this fine-tuned 5-minute zone, which is also 5 minutes horizon, which is also acting as a high liquidity zone, 5 minutes high liquidity zone, it stopped that fall. Whatever the sharp way it is fallen down, exactly the sharp way the prices moved up. But this is the target. Why I fixed a new target here? There is a reason. The reason is, here this is a 5-minute zone. Maybe this is the leg-in base drop. See here, we have a pro gap. When there is a pro gap, it is quite dangerous. There are higher chances it may not let prices moving further up. So this is one of the reasons why if prices reaches this area, you can exit the trade. And moreover, by the time it reaches, already it achieved 1:3 RR it achieved. So this is the minimum RR. And some people may exit here before starting the gap. That possibility is also there. That is also practical. Instead see, this is our actual target, no doubt in that. But this target will reach or not, it is a question mark. Why? Because of this pro gap. Whether the gap will fill, okay, today luckily gap is filled, that is a different story. But many times the gap may not fill. At that time, we don't want to wait prices enter into this zone. Where is the horizontal line? Yeah, sorry, here. Let me draw a horizontal line. When the gap, here the gap. So some people will exit here. Probably you will exit in this gap. Of course, it reached until this zone and also achieved 1:3 RR also it achieved. Software point of view, it reached 1:3 RR goal. But in real time when you want to exit, the target could be this blue color line, your first target. This is your second target. And this is your third target. Based on trailing stop also, 1 minute trailing stop also, you can plan your trades. That way also you can exit. Here you can draw a rally base. This also can include part of the base and rally. That way you can plan a trade. And one more, here you have a rally, base, rally. See, this is the one. If this is violated in this blue color line, those who are targeting for a third target, the actual 15-minute zone, probably at this blue color line, your trade would have been stopped out. Rally base, rally with pro gap, and this is violated here, this 1 minute zone. So you will exit based on the trailing stop. Or some of you exited because it exactly reached 1:3 in this 5 minute zone, you might have exited. If that is the case, a little extra profit you get. And those who are targeting for this 15-minute zone, probably here your zone is 1 minute zone is stopped out, you will exit here. These are the different possibilities. Okay, I am calculating exactly 1:3 how much we achieved. JK Cement has given 5,537 rupees, which is 5.7% ROI it has given. Because one margin cost is around, I think it is around 87,000 something. 87 or 89. Suppose if you are investing 2 lakhs, you would have got 2 futures today with that money. Maybe you would have got 10,000 rupees profit, 11,000 rupees profit you would have got, 11,000 rupees profit by buying 2 futures. Those who are having 2 lakhs capital. Generally one future average margin cost between 1.5 lakh to 2 lakhs will be there for many stocks. Of course, there are few stocks above 2 lakhs or up to 3 lakhs also will be there. There are few rare stocks. And also there are few stocks, the margin cost is less than 1 lakh. JK Cement is one example. Its margin cost is less than 1 lakh. That's why you would have got two futures. With the 2 futures, you would have gained 11,000 rupees profit. Of course, ROI is 5.7%. Whether you take one future or 2 futures, ROI does not change. ROI is based on 1 future's margin cost we are calculating. Whether you take 2 futures, still ROI is 5.7 only. But your overall profit margin will increase. Because you invested 2 lakhs, based on 2 lakhs, you would have got 11,000 rupees profit. So this is a successful trade. The 5 minutes demand zone as an origin. Remember, this 5 minutes demand zone is also a fine-tuned 5 minute zone. Because we have a 15-minute zone, overlapped with 75-minute zone, but overlap happened at the distal line. And also overlap happened at the 5 minutes level also. 15 minutes as well as 75 minutes. All 3 overlap is there. So that's why it is a fine-tuned 5 minute zone, but at the distal line. And at the distal line, this zone was created before this 75 minutes, well before 75 minute zone is created. So that is the reason why we are considering this is also a lower time frame zone as an origin to higher time frame zone. And moreover, multiple times is already tested. We can maybe this also could be as a 5 minutes high liquidity zone. So that's why it is a very powerful zone. It gave a very good profit for us. Excuse me. So this is about a successful trade, JK Cement, currently moving between 75 minutes demand zone, high liquidity demand zone, and also 75 minutes high liquidity supply zone. Prices are currently moving. Until one of these zones are violated, you get trade opportunities on either side. And next one, the one we discussed yesterday. Yesterday means on Friday. Beras Soft. Beras Soft already we discussed. This is a daily high liquidity demand zone. Almost 1 year back this zone is created, which is rally base rally. Because already how we discussed, you can observe in the Friday session. Directly I am going to the 5 minutes. Friday I told you this zone is having a risk. That means considerable order flow is there. 2 suggestions I gave you. One suggestion, type 3 proximal also, it just touched. You should be careful accepting a risk. See here, this is the 5 minute zone. Drop, 5 base candles and a rally. This is a failed ERC, will be considered as a rally. And this type 3 proximal just touched. So I suggested for the beginners, better to avoid the trade in this zone. But experienced people may plan the trade here. The reason is it is having a good order flow in this area. The risk is high. Risk is high means order flow is also high. Does it work? It may work, but quite risky because the type 3 also just touched. It didn't go inside. The proximal it touched and sharply moved. So definitely there could be some order flow, but it is a risky for the freshers. And another thing, the risk is also 3%. The risk of this type 3 proximal to the distal line is 3%. When it is a 3%, can you accept the trade? No. Your risk should not be more than 2%. But here risk is 3% is there. Order flow is there. That's why those who wants to take trade, only experienced people only can plan trade in this zone. How they will be planning, let me tell you. Today it's a successful trade. Maybe you would not have taken a trade. Even I did not consider this as a trade in our calculations point of view. But experienced people point of view, how they will think, how they will plan, let me show you. Do they accept 3% risk? No, nobody should accept. Everybody should follow the rules. Ground rules we must follow. There is no other option, especially risk management point of view. You may take exceptions while drawing the zones. That is all depending on your experience. But risk management point of view, rules are common for beginner as well as experienced people. They can't take 3% risk. Nobody should take. Maximum acceptable risk for anybody is not beyond 2%. Either it should be 2% or less than 2%. Some people don't accept beyond 1% risk. Some people don't accept risk beyond 0.7%. Some people don't accept up to 1.5%. Some people may accept exactly up to 2%. Either thing is possible. But how to plan the trade? Very simple. Reduce the risk. Go deep inside this zone. See here exactly I fine-tuned. Whatever I fine-tuned, this is the 2% risk area. 1.95% risk is there. If you take a risk at this proximal, type 3 proximal, it is 3% risk. Type 3 proximal is 3%. What I have taken in the type 3, further I reduced until I get 1.95. That means close to 2% risk level. So this entire area is till the stop loss, it is a 2% risk. But prices entered in this zone. When at 11:10 it entered into the zone, and also zone is slightly pierced. Notice here. Why? That's why I told yesterday. Type 3 also it is tested. It is quite risky to take a trade in this zone. It is quite risky. But still, experienced people can take the trade. Why I am saying experienced people? See the order flow in this zone. There is a big order flow in this zone. Because the order flow is in a big, even though type 3 is tested, because it is a high liquidity zone, there are higher chances. Some of this order flow in the middle of this zone, definitely it will consume all the existing supply. Once the supply is evaporated, then it will be pushing the prices up. That is what happened today. And how long after that, after it entered into this zone, after that how long it pushed? Up to 1:5 RR level it pushed. This is the 75-minute zone. It is not able to push. Maybe it might have pushed up to this area. Maybe time is not enough. Market is completed today. Before market completes, it reached 1:5 RR today. And the risk is, we fine-tune the risk to 2% level. Here the risk of this zone is 2%. Entire zone is 3%. At 2% risk level, we took the entry. Let us assume you would have taken the entry. Then from this particular 2% risk level, the prices moved up to 1:5 RR level. If you would have taken a trade, you would have got 10% RR. Sorry, 10% ROI. Sorry, not RR, ROI. You would have got 10% ROI on your investment. If anybody would have, especially experienced people, some of you definitely might have planned this trade. I'm sure about it. Why always I'm saying experienced people? See, being an experienced person, how my thinking level, let me tell you. See, there is a big risk in this zone. 3% risk is there. That means 3% order flow is also there in this zone. Did you understand my logic? 3% risk means 3% order flow is also there. But we can't take our risk beyond 2%. So that's why what I did, I fine-tuned my entry at 2% risk level. If I get a loss, 2% loss only I will be getting. Okay, but there is a problem if you plan like this. What is the problem? Sometimes prices may not reach up to this 2% risk level. Before itself, prices will be started moving up. If that is the case, you will be missing the trade. That's it. You won't get any loss, right? You're just missing the trade. That's it. But today what happened, luckily, prices even entered more deep inside. Just pierced the zone. Just slightly. Maybe few paisa below this distal line, and immediately, sharply, it moved up. Why? Because below this zone, there could be some strong order flow might be there. You may find them in the 1 minute time frames below this zone. But we can't identify the 1 minute zone because this is a 1 year old data, and our trading view will support me only 3 months, I think 3 months only maximum. 1 minute data I can observe only last 3 months data. There could be the reason. Definitely 1 minute level below, some zone will be there which is acting as a trap. Just we touched and sharply it pushed up. But whatever it is, we will be within our stop buffer area. This is the stop buffer. From stop buffer it pushed. So definitely experienced people who took the trade today, it could have been a very successful trade. Anyway, I didn't mark that zone in that, but high liquidity zone's point of view, it is a successful trade. But I suggested you people avoid this trade because of type 3. Because see, today it worked. There are times it will be violated. That's why what is the rule, at least for the beginner's point of view, whoever, at least those who are having experience up to 1 or 2 years, follow this rule. If type 3 is also tested, don't go for the trade. Maybe it worked today, it gave you 10% ROI. You might be thinking, if I took the trade, I would have got 10% ROI. Today it happened. It doesn't mean every time it will happen. Many times after touching the type 3 proximal, many times zones are violated, many times. Today it worked, there is a reason. Because big risk is there. That means very big order flow is there. That order flow consumed the entire supply. By the time it just pierced the zone. And no more supply, and demand pushed the prices up till the closing of the market. Hope you got clarity why this zone worked today. Except these two, we didn't get any other trades today. And next one is Asian Bank. Asian Bank also, previously we fine-tuned the zone. I already explained how to fine-tune this zone. The same thing only we are seeing here. This is a 75-minute zone. This is today's candle. Sorry, this is 75. Let me go to the daily time frame. ERC. Oh, sorry, it looks like something wrong. Yeah, this is the ERC candle as a rally. Failed ERC. This is a failed ERC as a rally because prices were moving up. Failed ERC, don't look into the color of the body. You have to see only the price movement. Then base candle and a drop candle. This is the one I already explained. Please look into the previous video. Previous video already we discussed this. Next one is Escort. Escort is also a 75-minute zone. It's a drop candle. You have 1, 2, 3, 4 base candles and a drop candle. This is what identified by our software. How I fine-tuned, let me explain. With the 75 minutes time frame, we have an order flow here. Medium size candle as a drop, 3 base candles, and again a drop with hidden body. This is a drop candle as a leg out. This is the 75 minutes fine-tuned zone. Within that, again 15 minutes fine-tuned zone I have drawn. 2 15-minute zones. One is a rally, you have 3 base candles and a drop candle, ERC candle. And again a drop, base, drop with pro gap again. We have 2 15 minutes order flows. These order flows again I fine-tuned with 5 minutes time frame. Three order flows we identified. Let me explain. This is the first one. We have a rally, you have a base and a drop with pro gap. And here also you have a rally, you have a base and drop. But it is also having a rally, base, drop. So this rally, base, drop. This is a 5-minute zone as an horizon to this 75 minutes fine-tuned zone. This is the 75 minutes fine-tuned zone. This is the horizon. And from this horizon only this zone is created. Let me delete. You will get clarity. See, this rally base drop is created from this area. That's why you can plan your trade again next time when prices are entering. If you feel maybe before reaching this order flow may push the prices, what you can do, you can keep some entry buffer and plan your trade. And if you add your risk up to here, the risk of this entire zone will increase. If it is within 2%, you can plan the trade. Till this type 2 proximal, rally base type 2, within 2% risk you can plan, but otherwise you plan at this proximal. This drop base, drop proximal, add some entry buffer, and then you can plan the trade. Why I removed this rally base drop is, this is the horizon. From the horizon it picked up and a new zone is created, LOTL zone is created. That means real order flow is in this area. Sometimes this new order flow may not let up to this. Many times it will reach, but sometimes if you have such kind of here, add some entry buffer and plan your trade. Or if the risk is within your limit at type 2 proximal, you can plan. If risk is more, type 3 proximal also, you can plan your trade within this zone. And this could be your stop loss, or maybe add some stop buffers a little above that. That way you can plan your trade. But anyway, today prices didn't enter into this zone. We didn't get any trade opportunity. Next one is Balakrishna Industries. This is 75 minutes high liquidity zone. See, drop base rally. Of course, it is also having 75 minutes supply zone also. This stock is also moving between the 75 minutes supply zone and 75 minutes demand zone. But anyway, yesterday this is identified stocks near the demand zone. See, this is yesterday's candle. So today prices entered into this zone. Look into the 15-minute structure. There is no proper 15-minute structure here. All these are all looking drop candles, drop, rally. But actually from where it picked up to here, you have a 5-minute zone. Of course, 15-minute zone is also there. Drop, base, rally. You can also draw a 15-minute zone. But exactly within the area you have 5-minute zone is also there. It's like what happened, how we analyzed JK Cement, the same scenario. But JK Cement, the zones are very near to this this high liquidity zone, but it is very, very far away. Go to the 5 minutes time frame here. This 15-minute zone is having a fine-tuned 5-minute zone here. See here, drop, base and rally with pro gap. So this is the horizon for this entire 75 minutes high liquidity demand zone. So that's why we want to plan our trade in this area, in this horizon. But today prices came very near to this. If some more fall would have happened, we would have got an entry here. But anyway, we didn't get trade opportunity in this zone. Balakrishna Industries. Next one is Divis Lab. Divis Lab is also a 75 minutes high liquidity zone, but it is a supply zone. This is a drop, 3 base candles and a drop. Today twice prices came near to the fine-tuned zone. But first time is morning 9:15 candle, so maybe freak trades will be there. If you would have added entry buffer, you would have got a trade in this candle, but it looks like a 100% freak trade. Let me show you. The morning 9:15 candle today. See, this is morning 9:15 candle. Oh, sorry, it's my mistake. We got a trade in this actually. This is 9:16 candle. I thought it is 9:15. A trade happened. Actually, we got a trade opportunity. With some entry buffer, it has given a very good trade. This is within the entry buffer. Why within the entry buffer? Let me show you. This is a 5945. This is the 5 minutes proximal line. 5945. Into 0.1, because we use a maximum 0.1 for entry buffer, divided by 100, you got 5.945, 5.9, 5 rupee 95 paisa is your entry buffer, minus 5.9, because below you need to add, so minus 5.9. What is that you got? 593.9.1 is our entry. All of you please understand how I am doing calculations. You will get clarity. Actually, when I am doing trade plan, what kind of calculations I will do? So this is the, oops, oh my God. 5945 is our entry, actual entry without entry buffer, into 0.1 divided by 100. You got entry buffer 5.9. So this is your entry, minus 5.9 is supposed to be your entry. This 5939.1. Let me paste the value. Oh, it is not allowing pasting. Phew, 5939.1. 593.1. So this is your entry. Actual entry is supposed to be. See, prices entered inside. This is morning 9:16 candle. I thought morning 9:15 and I avoided this. After that prices reached, they didn't cross this line, blue color line. That's why these trades are ignored. But this is a successful trade. Previously also once it gave a trade. Now today a little above it entered. That means a strong order flow. Slowly it is entering. What is your stop loss? 5957.10, but definitely we need to add some stop buffer. Approximate value I will add. 5957.10 plus 3 rupees I am adding. 5960.10. I am calculating the risk now. Minus, what is our entry? Why I am calculating the risk? To check whether to accept this trade or not. Minus 5960.10, right? 59. Oh God. 5939.10. 59. We got 21 rupees risk is there. Is it within, why I am doing this calculation? To verify, is it within 2% risk level or not? If it is beyond 2% risk level, we can't accept this trade. At the time you have to reduce the risk. If you reduce the risk, probably you will be missing this entry. So Divis Lab, let me go to the margin calculator, zero the margin calculator. So what is the 1,05,000? The close was here, our entry would have been here, a little more extra risk will be there. Maybe 1,05,500 could have been our approximately 1,05,500 could be the margin cost. So what is this? 100 into 100, 2,100 rupees. Into 100 divided by 1,05,500 could be the margin cost. 1.99, that means exactly 2% risk is there. So we can accept this trade. And next, what should be your 15 minutes target? After that, can we accept a minimum 1:3 RR is there? You need to check them. Then only you can accept this trade. Okay, so I am going to the 15 minutes time frame to check the 15 minutes target. So here we have a drop, base, rally, follow through candles. This is our 15 minutes target. Five minutes order flow is also there here. You see, many times prices came and moved up, came near to that, moved up, came near to that, moved up, and today it reached the target. When we got the entry in this candle, when it reached the target in the next 15 minutes candle, that means within 30 minutes your trade would have been completed. But from here to here, minimum 1:3 RR is there or not, we need to verify. Mostly it will be there. By looking into that, we can clearly tell, but let me add, sometimes narrowly we may miss, but narrowly 1:3 RR is also acceptable. But anyway, let's verify. We have a short position. Approximately I added 3%. So let me reduce 3 rupees stop level. So I have to add 3 rupees more. 5960. And this is our entry. See, this is your stop loss. Stop loss is 3 rupees approximately added. It could be even less also maybe, or maybe little more. But okay, approximately we added. You got 1:3.8 RR is there. So it's a perfect trade. So software has given a successful trade today. When we gave the trade, let me go to 1 minute time frame, you will get exact clarity. So this is the 1 minute candle, morning 9:16 candle. It entered. This is our entry. It gave the entry. This blue color line is our entry. And after that it reached the target when? 9:24. 8 minutes, the trade is completed. Within 8 minutes. How much profit we would have got today? Entry minus target. Because this is a short trade. Entry price. What is the entry price? This is the one. So risk is within the limit. And RR is also there within our acceptable level. And 15 minutes target it reached. All these are all positive scenarios. 5939 minus, what is the target? Profit level. This is the price, 5858. We got 80 rupee 90 paisa profit. In Divis Lab, we have net quantity 10,000 into 100. You got 8,090 rupees profit we got. It is a successful trade and it is a short trade. $8090 is the profit. Oh. $8090. And what is the RR? $1,005,500, approximately 500, maybe 100 rupees plus or minus will be there, but approximately. So into 100 divided by the margin cost would have been a little high because price is closed below the zone. Because price is closed below this entry price, definitely it could have been a 500 rupees higher. Because if you calculate RR at this point, we get more ROI we get more ROI. We have to calculate nearest ROI. So probably another 500 rupees cost might be extra will be there. Maybe another 300 rupees or 400 rupees. So that's why the rounded value I am adding here. From the current price, I am adding another 400 rupees additional. Divided by 1,05,500. Previously risk also we calculated exactly with the same value. We got 2% risk, 1.99%. We got 7.668, that means 7.7 RR we got. The rounded value 7.7 RR. $7.668. So rounded value 7.7 RR we got. We got an excellent, this has given an excellent trade opportunity. And moreover, it is a fine-tuned zone. Okay, how I fine-tuned, I didn't explain you, right? Okay, let me get into that. This is a 75-minute zone. This is a 75 drop, 3 base candles and drop. And we have 15 minutes fine-tuned area. We have a drop, we have a base candle, and we have a drop. So this entire thing is a 15-minute zone. Rally, 2 base candles and drop. This is the rally, 2 base candles and drop. This also I considered as a base candle. Rally, base, drop. Even drop based drop also it gives you the same, but 15-minute zone width will be exactly same as the 5-minute zone width. Okay, rally based drop. And this again I fine tuned with 5 minutes time frame. And the 15 minutes fine tuned area is having 2 order flows. This is the first order flow. This is the rally candle, base candle and a drop candle. And the next order flow is rally base drop. This is overlapped at the distal line. This is like 5-minute horizon as a 5-minute zone as an horizon to this entire 15-minute zone. That way also you can consider. And also this is also a fine-tuned zone for the 15-minute zone, but fine-tuned at the distal line. So either side you can consider. Okay. So we have two order flows. The first order flow prices, maybe this order flow is very strong. That's why before entering into this zone with this entry buffer area, it went. See, remember, this trade is successful only for those people who are taking entry buffer, the 0.01% entry buffer. It's a clear trade because prices went a little inside the entry buffer area. See, our entry buffer is 5939.10 and the high of this candle is 5941.30. 5941.30. This is 593110. Almost 2 rupees. It moved beyond this blue color line. So it's a clear trade. And moreover, the trade is at 9:16 1 minute candle. See here. This is morning 9:16. So it gave a clear opportunity. Whether you have taken the trade or you did not take the trade, that is a different story. But high liquidity zone did its job and pushed the prices up to this 15 minutes target zone. This drop base rally. And today the zone is pierced actually. There is a next 15, this is the ERC. The next 15 level it actually reached today. But anyway, we are considering the first one. Up to here prices reached. But we calculated up to here. This is 1:3 RR. So Divis Lab is another successful trade. Somehow it missed from my analysis because I thought that is 9:15 candle and ignored this trade for considering the performance of our high liquidity zones. Okay, Divis Lab is another successful trade, but good thing is I shown you how exactly you do the trade plan when you are planning your trade in a particular zone. Next one is ONGC. This is also a 75 minutes high liquidity supply zone. And we didn't get a trade today. Prices went morning up to this zone, but not into the fine-tuned area. Okay, how I fine-tuned? Go to the 15 minutes time frame. Here a 15 minute zone, you have a failed ERC leg-in, you have a base and drop. Within this 15 minutes area, see the order flows are, this is a drop candle, this is a drop candle. No 5 minutes, but here we have a rally, 3 base candles and drop candle. This is the 5 minute zone as an horizon to this entire 15 minutes fine tuned. Here real order flow is there. And probably this is also working as a 5 minutes high liquidity zone. Why? Because you see the rally base drop. After that it picked up the orders and again came down. Second time again it picked up the orders and again it came down. Third time again it picked up the orders and again it came down. This time this entire high liquidity zone was created. This is part of the leg out formation. This price action is part of the leg out formation of this zone. See here, leg out formation. It picked up the order from the zone and sharply prices. That means here a strong order flow is there. So this is the area you should plan your trade. Here we have the real order flow. But anyway, today prices didn't enter. So we didn't get a trade opportunity. And the last one is PI Industries. This is also a 75 minutes high liquidity supply zone. Here also we didn't get any trade opportunity today. So this is a rally candle, base candle and a drop candle. Rally, base, drop. This is the 75 minute zone we have drawn. Next 15 minutes zone I fine tuned here. See, this is the ERC candle. Failed ERC candle can be considered as a drop, 2 base candles and a drop. With small hidden gap is small pro gap is also there, very small. Okay, this 15-minute zone again fine tuned with 5 minutes time frame. So here we have a 5-minute zone here. So this is also I consider as a ERC candle, 2 base candles and a drop follow through candles. This is the fine tuned 5-minute zone. But today we didn't get any trade opportunity. See today's candle, it did not even went near to the zone. So this is about the high liquidity zones generated. Because I provided this report to everyone as a free of, definitely those who traded in Divis Lab or JK Cement, you would have got good profits today. Of course, if anybody would have taken a trade in Beras Soft by proper fine tuning the zone risk to 2% level, you would have got 10% ROI. But even Divis Lab also has given 7.7% ROI. This is the 75 minutes. High liquidity zone trade. Somehow I ignored this stock, but gave a good trade. Okay, this is about our HLQ zones and also Q&A-15. Hope this information is useful. Let's all meet again in our next video. Thank you.